Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to the Pepsi stock over the short term. First of all, let us very quickly check the major structure over the monthly chart, and of course it's a rare case of clear and easily identified uptrend over the monthly chart, which is not common. We can notice here we can easily draw the line connecting the higher lows over the very long term. And this is not easy to get over monthly charts. And of course, it's clear that we can connect the rising highs, higher highs, with a parallel channel line. Later on, the stock managed to break this channel line and go to another parallel second channel line. And now we are in the third possible trial to create another parallel channel on the upside, but in general the stock is in a very positive structure over the monthly chart, which is of course very important over the long term. Let's check the weekly for long and medium term trends. Of course, over the long term it's clear that the stock was moving in a great uptrend, but lately it started to move a little bit sideways over the medium term. So concerning mid 2021, the stock started an uptrend, which is considered a major uptrend now. This major uptrend is really getting stuck a little bit into a medium term sideways. This is important. This medium term sideways is very important. It is having a resistance around $177, and it did not manage to break this level 2 times before, showing a lot of signs of reversal when it tried to test this level at 177. It's clear that Pepsi reflected through shooting star, bearish candlestick, and another double shooting stars at the second time. So every time Pepsi tries to pass through 177 barrier, it fails, showing signs of bearishness by showing reversal candlesticks over the weekly chart. And lately, or after that, it creates a peak and starts the fall down to a very important horizontal support level around $154. At this important weekly support, the stock begins to show signs of stability and creates a move later on to the upside. The difficult question here, is it going to pass through 177 this time? Will it manage to break through 177, making use of the correction in the market going on now? Keep in mind that the stock now is positive over the long term as well as the short term, as long as it is above $172 area. Pepsi is positive and bullish over almost all time frames, and this will be much more clearer on the short term details on the daily chart. Here we can see 2 waves. The first wave is considered a short term impulsive wave, reflecting from the 154 weekly support, reaching the 177 resistance. We are connecting here the last 2 lows, of course higher lows, and the intermediate peak in between and here our daily channel line goes. So over the daily chart, the stock is moving in an important upward wave. It's a good rally. Over the hourly chart, we do have a kind of speculative ultra short move to the upside, with very important support level around $173. Keep in mind that we also have a kind of the uptrend line from the daily chart running through 171.50. And at the same time, we do have the monthly channel line running at around 171, plus the horizontal level of the ultra short term move at around 73. So count the supports. You do have one monthly important support considered as the channel line of the monthly chart. You do have an uptrend line from the daily chart, and we do have ultra short term support from the hourly chart. So almost all the time frames are showing positive signs, and Pepsi is considered bullish as long as it is above this zone of supports ranging from, you can accept it from 170 up to 173. Therefore, any correction or any kind of short-term move to the downside is not dangerous, and the stock is considered in the same bullish environment as long as this area is not broken to the downside. Okay, let's go back to the daily chart and to a potential virtual trade that we are waiting for. How it comes? Here it goes. First of all, the weekly resistance is at 177. So if the stock managed to break above that level on a considerable exceptional high volume with a week or 2 weeks close above the 177 resistance, this confirms a potential virtual trade by going long as a buyer with a target that we will calculate now by calculating and measuring the distance between the support of the sideway and the resistance of the sideway. So the distance between the support and resistance, which is the thickness of the trading range, is around $20. Maybe a little bit more if you calculated 154 up to 177. It's almost exactly $23. So if we add these $20 approximately to 177, we can get a target of around $197, maybe ranging up to $200. So this is the expected targets of Pepsi if it managed to successfully break above 177 barrier. The stop loss or the safety level should be the rising channel line from the monthly chart, which is running through $172. And this is very important because as long as Pepsi is closing above this level, it is considered positive. It's considered positive over all time frames. I can hear an opinion now saying, why not take the risk of going short since the stock is testing a previous confirmed level of bearishness, and it is highly expected for the stock to return to fall again as it did 2 times before. Why not take a short selling virtual trade? There are 2 reasons for that. The first reason, we did not observe any kind of bearish candlesticks over the weekly chart. This is the first situation, or the first thing to notice. The second thing, over the short term and ultra short term, The stock is in an uptrend, clear uptrend over the daily chart and over the hourly chart. So it is too soon to expect that the stock should reflect from the 177 barrier. Instead, it is going strong against the resistance, and it is more likely to manage to break through the 177 area rather than reflect from it. That's it for now. Write the numbers, write down the numbers, because they are very important numbers for now. That the area of entrance of the virtual trade may range from 177 up to 180. This is the area of expected entrance if it confirmed the break as we have just explained. The stop loss level is around 172, and the targets is ranging between 197 up to 200. Of course, we will keep watching Pepsi as long as it is moving around the resistance until the conditions are met. Then we will make another video for a virtual trade to activate the signals and write down our trading journal. That's it for now for Pepsi. Thank you for watching. Please feel free to like, share and subscribe. See you soon.